Today we're looking at the odds of a potential upside follow-through after yesterday's 1% gain. So as you know, it was the third 1% advance of October, which is the most in the calendar month since we had 5 here back in June. Now we know that time was much different for a few reasons. The biggest one being that there were 1% declines all month, which of course happened in July as well. That compares to 5 in October, which is the most we've seen since March back here. And we know that both February and March had a lot of two-way volatility. Now, speaking of that, because we have now 8 on the month, it appears that two-way volatility is back. And if you think about what type of market environment has two-way volatility, where usually there's just two of them. You talk about a downtrend, right, from January to October, and then the period that emerges from a downtrend, right, October, November, December, all the way to March. And we see that pretty clearly here on this chart, where this is all of the price action going back to the beginning of 2022 here until present day with a rate of change on the bottom. And so a lot of big moves up and down all the way through the October low. What happened after that? Those big moves stayed with us all the way to here and really stopped as we got this breakout, as we can tell, right as the second quarter began, of the breakout here, indication of the breakout here. And that happened as two-way volatility went down. And that is, of course, the characteristics of an uptrend. We want to have a small amount of 1% moves, but we want to have more 1% advances versus declines, and we want to see bullish patterns work. And so looking at this in its entirety here, it tells us that really only 4 months of 2 years of price action did we have an uptrending market, right? So that obviously needs to change if we want to see a substantial upside follow through into the last 2 months of the year, which we know typically has positive seasonality. And so looking at this from the short term first, as we should always do, this is the 5-day moving average. As we know, the S&P doesn't really veer too far from it, no matter what type of market environment you're on. But it is pretty evident how different the behavior has been since the top here in July, where number one, the moving average itself has been sloping lower, no surprises. The majority of the time, the price action has been occurring underneath the 5-day moving average as well, aside from what we had here, of course, and just recently the failed mean reverting move there. And because of that, the moving average itself, of course, is also making lower highs. Again, not surprising, but very important nonetheless. And so if we just color code here when things really changed, and we have it marked just a few days after the top here, first time that we saw a gap below the declining 5-day moving average, that really changed the character of this market, where before, much different, of course, spent a lot of time above the moving average. And I think even more glaring is the fact that spent very little time underneath that at all, right? It was just the dips that were bought automatically, where of course that has been completely different now. And so I'm not going to know this after 1 or 2 days, maybe even a week or two, but we'll begin to tell if a trend is really with us if we start seeing more action like we saw before August. Also, let's go back to looking at good closes, because guess what? There have been very little. In fact, the combination of an up day, 1% or not, and a close near the highs has been really rare since the middle of October. Last time we really saw one was here back on October 16th, the last time we actually had 1% advance. And going in just a few days before that, after this 4-day winning streak ended, any upside we saw on an individual day basis was instantly wasted coming down. And so really the ability to do something with yesterday's is really important to change the complexion of what's been going on here over the short term. Another way to look at this is just the number of streaks that we've had, both winning and losing streaks. Again, look how different it was right at the end of July, where we had now 6 different losing streaks of at least 3, compared to those only 2 winning streaks of at least 3. Of course, those 2 4-day rallies which failed, compared to the reverse here when we had 5 different winning streaks of at least 3 days, compared to only 2 on the downside. One's an uptrend, one's a downtrend. Don't have to tell you why that's happening, but again, just shows what we need to see change. And you can look at very different perspectives, but this is why we should never really get too excited about just one day unless we see the type of action that we typically do in an uptrend. And so what to expect? Well, we've seen those two relatively big moves on a short-term basis, about 5% here, 4% here. Both of them produced nothing but lower highs right now. And so right here, this would be a 4% move, say a little bit, maybe say 42.80, thereabouts. That would get us nowhere, of course, here as well. Even if we went up 5%, that would get to 4,300, still nothing, right? Because of what's been going on here. So we need one of these to happen where you have a rally, we talked about this before, have a potential higher low, and then a breakout, and then from there go. Because just having a few days worth of action and having completely run over is not going to do anything for us. And so in terms of patterns, right, there were two live bearish patterns coming in to the week, got tested yesterday. And so we just need to see some upside follow through to negate this. So getting to, that 4 or 5% move would get us in here and negate this at the very least. But on a very long-term basis, right, there's much bigger patterns going to take more, right? We're going to need 5 or 6% move to get back up here. And again, that's going to be pretty substantial, and you probably wouldn't get it in one shot. So if it happens, again, as you talked about here, where you have a pullback and then another rally, then we could be eventually negating this big bearish pattern again with a bullish pattern that's working. And again, we haven't seen a bullish pattern work out where we had a breakout, upside follow through, and then the upside target hit since July, right? So that's what we need to see change. We'll be watching it through, of course, the beginning of November and on, and we'll provide updates along the way. Don't forget to check out these videos and subscribe, and talk to you soon. Thank you.